Hello, warriors. How's everyone doing? Everyone doing all right? Hello, Humphrey, Bruno. Hi, Brock, buddy. How are you? Kevin, happy Monday to you, Alexandre. We will have a good week. Hugo, Arena, good morning. Alejandro, TJ, doing okay. Jeff Hansen, hello. Forex Gal, how are you? Ren, Ingmar, everybody. Reginald, nice to meet you. It is raining in San Diego. Cats and dogs. Yes. Okay. So starting off with Euro. Bull bear line. Thank you. There you go. Hi, Didier Tomas. Thanks for letting me know. You guys see it now. So I can't get constructive Euro until we close over this bull bear line I have above 122. So, you know, it's not happening on multiple time frames. You still need it. Okay. What's interesting here in cable is the potential right shoulder, pretty good symmetry, or a failing rally, neckline coming in at 650. So while this was happening, EG came off. I think you want to be a buyer of EG between here and 88.60, risking the lows, potential low developing here. If we get back over this 89 on the close, you're looking at 90. Okay, so that's one reason I went for the cable short, is because of what happened here last week. Remember, I showed the two drives. Canada, I still like it. Maybe we'll get an ABC back down towards this, maybe back down towards 126.80. But, you know, sometimes you just have to be long anywhere and then have the mentality that you hope you're early and there is a pullback for you to build a position. I think Canada's in that position to do that. So Dixie doing nothing wrong. And, you know, really very muted response in Aussie, which, you know, was one of the strongest currencies. Would have preferred to see a new high. I mean, there's nothing that bearish that I see here in Aussie compared to some other currencies. S&P, we did not make a new high. Tried. Is it a failing rally? I was talking with Blake last week, and I said, I'd like to see another new high. And he said, no, we don't, you know, he didn't want a new high. So far the market is going along with Blake Morrow about not a new high. If we get one, the difference between last week's sell-off, when we had this, especially with the weaker opening Friday, is that we were confirming the high up here. So a big difference would be if we made a new high, and I think it's 38.68, maybe into tomorrow, that this time the shorter term time frames in S&Ps will not confirm. That's a 4, that's a 2. And, you know, we do have the Fed this week, so keep that in mind as well. And to have a deeper break to buy Canada, we need some type of pop in crude. It's not doing much so far today. Let's see it. Yeah, it was here last night. So crude looking a little heavier than most of the stock indexes, but, you know, maybe we'll get big earnings this week. True. You know, a lot of different earnings this week. Gold to me looks like we want to try this 1880 level. And I know that it's against some people's religion to short it, but we got a rally up there. I would try it. Silver still being contained by this moving average too. So I'll go with David Brady's comment that there's just too much bullish sentiment on the retail front for silver, and that they have to be shaken out before there's better buys or more upside. Okay. So I believe today is the last day for you guys to get on board at these rates on the sale. Let's see if it's still up on the website. Yep, it's still there. And it says expires the 25th, which is today. So today is the last day for you procrastinators to get a nice discount on our platform here. Okay, where you're going to have really so much research just right here on Close It Short. Jeff Hansen signed up yesterday. Good way to be, Jeff. I don't think you'll regret it. So, you know, just a sample. If you've never seen the platform before, look at all the research that goes into it. You know, you could, and all the different methodologies that go into it. So, you know, this is when you look at the euro, this is Blake, and he has a verbal explanation for this. And, you know, you could go to see what Elliott Wave says about the same thing. And looks like Greg is looking for this rally to fail here and to get a C to the downside. Maybe we get up to 22. You know, and then you could say, well, you know what? I like Andre's harmonics. I want to see what he thinks of the euro. And then if you see some confluence, so he's got some higher targets up towards 23 for a harmonic pattern to complete up there. But you see how nice it is? Yeah, see how nice it is? Yeah, I noticed yields are lower. So we'll see. I don't know if that's going to last. I actually think that the Fed may say something that gives us one more rise in yields, Brock. Okay. So, you know, this is just a sample of what you get, let alone the chat room, let alone the members only webinars that includes the bias chart starting next week. Good morning, Blake Morrow. How you doing, man?
Hey, good morning, Dale. And yeah, speaking of the bias chart, I was just pulling a blank one up so we could get started on that this morning. So you're getting torrential downpours over there?
Oh yeah.
Yeah, we are too, which is great. I mean,
yeah,
you know, it's actually like the first rain I think we've seen in, I don't know, 8 months, 6 months. I don't know. It's been a while.
Yeah, we had a few days of it now.
Yeah, it's crazy. It's good. Matter of fact, it's supposed to rain here all day, which is nice. Very welcome.
God is crying.
So if you guys don't know, Dale lives in Southern California. I live in Arizona. So usually whatever weather he's getting comes my way eventually, because it comes from the Pacific Ocean and makes its way east. And so that's why sometimes I like to hear what Dale's dealing with, because I know it's coming my way.
Yeah, I'm like a forward observer, like they had in World War II, where they would drop guys behind enemy lines.
One of the things I'm just I was talking to you know, my neighbor. I'm just looking forward to not taking my kids to practice the next couple of days. I can kind of get out of not doing the 8, 9 o'clock at night, you know, shuttling my kid around to practice. So anyway, but I hope you had a good weekend. I hope everybody listening in had a good weekend. And like Dale said, I'm gonna mention this right now. Today is the last day of the special pricing that we have for ForexAnalytix, and you guys know that it, you know, just goes away, and when it goes away, it's not here anymore. So anyway, that is happening. This week is going to be an important week. If you know, I hope everybody enjoyed the double week ahead videos. Should I tell everybody what happened?
Yeah, you're an open book.
So last week Greg goes, you know, he's like, hey, I'm having a hard time jumping on the daily webinars, because his kids are like a lot of us. Kids are being homeschooled, so it's difficult for parents to do some of the things that they want to do. And he's no exception because his kids are younger. So he's like, could I just, to give everybody my views, can I just film the week ahead video this week? And we're like, yeah, sure, that'd be great. And of course, I got up early. I got up early Saturday morning, and I'm like, I had all these ideas about the market, and I'm like, okay, you know what? I'm gonna film my video early. And then I did it, and after I did it, I realized that I didn't need to do it because Gregor was going to do it. And then, I asked Steve and Stelios and the rest of the team, I'm like, hey, it's okay if we have 2 videos this week, right? And so we had 2 videos. So hopefully you enjoyed those. That's how that happened, just so you guys know why that actually happened. So anyway, it was, I didn't have to do that. And I it would have been nice just to skip it, but I had already filmed it, and I'm like, well, I thought it had good information because really I'm focused this week on the Aussie dollar. That's like my main focus, and obviously equities, because as we were just talking in the chat room, and for those of you that don't know where we're at all day, this is it. This is the chat room, and you can, I was posting a pic. For those of you that don't know, in our chat room, we call the dollar Mexican peso Salma Hayek. For Salma, we call her Salma, and I was posting a picture of Desperado because one of our younger traders, he's like, I'm like, have you ever seen Desperado? And he's like, no. I'm like, oh man, that's like the classic film. But you can see we don't talk just about Salma. We talk about charts in the markets and things that are happening and all of our trades that we're doing and all that stuff. This has just been for the last 2 hours. I got up right about here, so right there. So you can see and that was 2 hours ago, and you can see all the chatting that's happened since then. So, we're talking about the markets and what's happening all the time, and so that's why when you're with the Forex Analytics community, it's not like Dale said, it's not just the app and it's not just the technology, the platform you see here. It's not just Live Squawk. It's not just, the, risk management tools and all the analysis and, it's the chat room too. And the chat room is like, very important. We just actually launched our Spanish chat room today. So if you are Spanish speaking and you want to be in that chat room, you could be in there as well. And you can see it right, it's right here. There you go. That's from today. So anyway, that's it. And let's go over the Aussie, because I think the Aussie is going to be very, very, the reason why I was saying that is because we were just in the chat room and Stelio said, it's all about stocks. Stocks are moving based on, currencies are going to move, or it's all about what currencies are doing. I'm sorry, I should say this. It's all about what stocks are doing is going to influence what currencies are doing. I'm like, absolutely. The only reason why, or the only way the Aussie is actually going to break down below 77 cents this week, in my opinion, is going to be due to, well, actually, I could take that back. It could be CPI this week that, if it comes in weak, but I actually think it's going to be more influenced on equities, and that's what's moving a lot of currencies. You can see the dollar Mexican peso at its highs of the session. Why is it at its highs of the session? Because, equities are at their lows of the session. And if you don't know why equities sold off this morning, if you follow me via Twitter, soon as the news came out that Merck is stopping its shuts down its COVID-19 vaccine program due to poor results, that actually the stock market actually sold off from there. We were trading at 38.55 in the S&P. Obviously we've traded down to 38.40. We're bouncing right now, but that's the reason why equities came under pressure initially, is because of that. And so one of the things that I'm kind of fearful of regarding equities, I say fearful, it's one of the things that I think is the bigger risk for currencies, is that the vaccinations prove not to be as effective as people want. And I don't want to be a Debbie Downer, because I haven't gone anywhere in, over a year. We haven't vacationed. We've been playing it safe as a family, minus my kids playing sports, to get them out of the house. But, we've been, relatively safe. And I, just like everybody else, I want something great to happen and with vaccines and life to go back to normal. But I think that's one of the bigger risks right now, is that the vaccines, it takes us a little bit longer to get to herd immunity. And I think 2021 is at risk of being another, repeat of 2020. I know no one wants to hear that. I'm just saying that I think that's one of the bigger risks that equities have, because we've priced in so much good, so many good things, and so much, bounce back and growth. And I'm just hoping that this isn't a common issue that we see over the next few months, where we're just not seeing the effectiveness that we want to see.
Or perhaps it takes a long time for Biden to get another rescue package through.
That too, there's definitely going to be a lot of debate. I don't think Republicans are going to roll over and just, and there are, remember, it's not just Republicans and Democrats. There are a lot of Democrats too that are also, more
Fiscally
austere,
conservative.
yeah, and more conservative than others. And I think a lot of people have an issue when you start talking trillions of dollars of spending. So I don't think it's a slam dunk, that. And then I do think that a lot of non-vaxxers are out there. There's one of the, I think, bigger risks of, and I'm going to get into the charts here in just a second. And we're going to go through all the Forex market, but I just need to say this before I wrap up, is that I do think that the markets are going to be, or excuse me, the general population is going to be more hesitant to take vaccines, even if they are fairly effective and what we perceive, at least near term, as safe. I still think there's a lot of mistrust out there, and those seeds have been sown for the last year. And I don't need to rehash the reasons why, but I think a lot of people just don't trust the vaccines being rushed through, and made. So it's going to take a little bit of time to get everybody on board. And the reason why that's a big risk is because how are you supposed to get to some sort of herd immunity if a lot of the population is just either not willing to take a vaccine or even have access to it? And that's another big issue where we just didn't acquire enough vaccinations, like orders, early on. And that's going to be a challenge of the current administration here in the United States, and probably with the rest of the world, is just distribution. So anyway, I'm going to get off that topic, because I want to really focus on what's happening in the markets. But those are just, if you guys have been listening to me for many years, you know that I like to rant sometimes, and I usually have like something that's on my mind in the morning. And by the way, I'll be going back into that next week when we do the bias chart. If I have something to say, I'm going to be saying it to the exclusively to the ForexAnalytix members, because you're going to have to be a ForexAnalytix member to get the bias chart analysis starting next week, because we are, after this webinar is over, we're going to be doing that every day for the ForexAnalytix subscribers. Okay. So our times are going to change just a little bit, but I'll still be here for the free webinar every day, of course. All right, let's start with the S&P. So the S&P is, Dale, as you were mentioning earlier, yeah, I was hoping that we wouldn't hit new highs. It looks like we're making lower highs right now in the S&P. But if you guys haven't seen the NASDAQ's at new all-time highs this morning. We're actually screaming in new highs above the channel resistance, almost to the 161% extension here. So, but the S&P, we are, and let me get rid of this. Oop, that's not the one I wanted to talk about.
18 handles off it.
What's that?
About 18 handles off the high from last week right now.
Yeah, for the S&P?
Yeah.
Yeah. And and I think that we have to get, and this is what I said for the week ahead video, we have to get below this 50% retracement for me to be thinking that we're heading back towards the lower end of this channel. For today, I think the 38% retracement is going to be important. So I'm going to write down 38.25. And we have to recognize that we're still in a bullish trend. I mean, you know, here we are at the 38%. We're not even at the 38% retracement. The only problem that the S&P has right now is we aren't making new highs yet. That doesn't mean we can't make new highs this morning. So 38.67 is resistance. Okay, let's go into the FX market. So here's the euro. As if you recall from the week ahead video, I think our range is going to be from dollar max is breaking 20. That's bullish. I'll get to that in just a second. Salma. We've been talking about Salma for the last couple hundred pips here. If you guys are listening to the week ahead video, you guys know that I feel that we are going to be range bound before the FOMC. I think we're going to be slipping right towards this 21.25 in between the 22.36 and the 20.50 right here. So 20.40, 21.40, 20.50, I think is going to be where we're at. I'm thinking we head up there, but I don't know. After today's price action, we might not make it all the way up there. Today, resistance is 122.20. Okay. Support will be, well, I'll write down. I mean, that 120.50 is 100 pips away from where we're currently at. I doubt we make it down there today. I really doubt it. But I mean, you never know. I just don't think that that's realistic today. Support intraday 121, probably 121.10. I would say it's going to offer not great support, but I think that it will be support for today. We are range bound. Overall, we're in a bullish trend, but I think we're range bound near term. Cable. So the sterling continues to flirt with the 137 level. It's going to have a difficult time though, especially if equities stay weak. But you guys know that it's not just 137, it's 137.50 that's the big 78% retracement right here. That's key. 137.55. In case we, you know, the London fix spikes us up there, that could offer resistance, but I'm not going to put it in bullish right now, just because we closed below 137. So anyway, I think support will be this spike low down here, this trend line support you can see through here. It's going to be at 136.20. We are still winding up. Aussie. So again, really critical support for the Aussie dollar comes in at 77 cents. Resistance today, 77.51, which is the 618. So I'm going to write that down as 77.50. And I'm going to put it as bullish just while we're above 7,700. But if we break through 77 cents, I'm sorry, we break through 77 cents, it turns bearish quickly. Okay. Let's go over to the Kiwi. So here's the Kiwi. Kiwi is holding up well. And ever since last week's inflation data, which was right here, the Kiwi has kind of been bucking the trend. And the slide in the Aussie New Zealand has really put some upward pressure on the Kiwi and just in general. I think the 618 retracement, as you can see, is right here. Okay, that comes in at 77.30. Support is going to be at 71.70. And, you know, I think it's more range bound than the Aussie, but it looks a little stronger intraday. And the reason why, like I said, it's the Aussie New Zealand. The Aussie New Zealand's 100 pips off of its most recent high. So that's keeping the bid in the Kiwi. Let's go over to the dollar Canadian. So the dollar Canadian, as you guys know, we hit a new trend low last week, false breakdown. I think it's in a, you can see it right here, descending wedge. I think resistance is going to be really critical as we head up towards 127.50. I think we are range bound, and we are on the verge of, probably turning bullish here, because it's range bound while we're in this direction, while we're going sideways here below 129.50. But really, if we start getting above this resistance, it could turn bullish quickly. Support at 126.85. Let me make sure that's right. Let me get a little bit closer in here. I'm going to write 126.80 as being support today. Not great support, but it's support. Dollar Swiss, inverted head and shoulder pattern. Notice how we dipped last week. Not quite to, I was hoping we get down to 88.25. We only made it down to 88.37. So I'm going to write down 88.40 as being support right now. And you guys know I've been talking about this inverted head and shoulder pattern for the last couple of days, or, last week and a half or whatever. So, which it was our chart of the day blog on the blog. Intraday resistance, 88.85 and then 89.25. So 88.85, 89.25, which would be key resistance to really break us out higher. Let's see. Let's go over to US dollar, Norwegian krona. Picked up some this morning. You can see we have a bull flag this morning. This is one of the things we were talking about in the chat room. I bought it at 850 here, and it's trying. We are making a higher low, and I think there's a risk that we move back up towards 860 here. So support intraday is going to be 844. Resistance is going to be in the flag pattern breakout would be 850, basically 858. We are more, this is actually more counter trend, I think, but now that we're not making a lower low, I'm going to keep it on range. It can't turn bullish until you get back above like this 865, 870, which is a longer term downtrend line. And we really got to break back above this previous support that we couldn't do it last week. So, but I think right now it's more in a range. Dollar MEX, 20.01. Then after that would be 2010. So support 1985. I'm not going to put on the extra zeros this morning, so just leaving it like that so we can fit it all in here. And remember, guys, one of the reasons why I'm going to be doing the bias chart starting next week, I'm going to be doing it after the face webinar, is so I can take my time and kind of explain to you guys why I'm feel a certain way, or I'm looking at charts a certain way, why I'm seeing support exactly where it's at, looking for more confluence instead of, I'm just buzzing through the bias chart and, without much explanation. And I don't like that. I'd rather spend more time really with you guys, talking about, why I feel a certain way versus just writing it all out for you. 103.90, you can see this trend line that comes through here. 103.90 is resistance support. It's not far from where we're at. I would say probably closer to here, 103.60. This is more intraday. And if we break above 103.90, then the next stop would be 104.50, which is way up here, which is obviously critical. 104.40, I'm sorry. Okay, let's go over the dollar index and gold, and then now I'm going to pass it over to Steve and Stelios and Dale. Okay, so here's the dollar index. As we talked about last week, 90 cents is really key support. We didn't quite make it down there at the end of the week, but I still think it's pretty key support, especially during an FOMC week. Obviously, resistance is 91 cents, but for today, this previous support here, you can see the spike low right here and almost a spike high here. So I'm going to say that 90.40 right now is resistance. So we have 90, 90.40, and then obviously 91 cents. We're in a range. And last but not least, gold, which gold's getting a little firm this morning. Firmer. Last week we had talked about this inverted head and shoulder pattern. So that means the neckline really comes in at 1880. Support being the spike low here at 1837. And we're in a range for now, but we could flip to bullish. All right, so there's your bias chart. Steve, Stelios, Dale, good morning.
Good morning.
How you guys doing?
Very well, very well.
You guys have a good weekend?
Yeah, very nice and quiet. Can't ask for more. We're in lockdown anyway, so.
Good morning.
What's lockdown like there, Stel? Is it like the first time, or is it a little more liberal?
It's a lot looser this time around. You see it in people. Plus,
Yeah.
they're actually slowly, because we're doing well, they're slowly relaxing the measures. So schools are opening. They're going to open shops soon. So,
Yeah, you guys have done better than most countries.
I'm shocked personally, but yeah, we have, I think.
Yeah, you guys have. It's great. I mean, it's.
Well, besides
watching
China,
some videos of the concerts that they're having in New Zealand.
they're having concerts. God, I miss music.
I mean,
Live music.
It's very frustrating. It's frustrating when you see it. It's great for those people that are enjoying it, but for those of us that are dealing with, even though we're not dealing in so much of a lockdown, but just dealing with what we're dealing with, it's just hard, makes it tough. Anyway, hey guys, I gotta split, I gotta roll. So I want to thank everybody for being with us this morning. Remember, today is the last day for the price for our special, and then after that, you guys are going to see it for a month or two, unless we might get some requests. Sometimes we get requests to extend it for a day or two, so it may happen. But we'll see you in the chat rooms, and we'll see you in the I'll see you at the daily roundup webinar for ForexAnalytix subscribers in 4 hours from now. So thanks everybody.
Thank you, Blake.
Thank you, Blake. Thank you. So hello everybody. Happy Monday and all.
Still.
And what's our friends are quite saying quite a few things. Oh, Didier saying come to Thailand. There's no lockdown. Man, Didier, I want to come at some point, and preferably without the wife and kids. Anyway, so what do we have? We don't have that much actually overnight or this weekend, over the weekend, and it seems to be still, like we said on the chat room this morning, all about equities. Like the S&P is testing daily lows as we're talking. But really, Blake was saying dollar Norway looks like it might be on the verge of breaking out higher, and other currencies on the verge. It's all about risk, and you know how FX is so correlated with risk these days, and the dollar is obviously. So I'm still in a wait and see mode, and every dip has been bought in the last 3 decades. but it still seems to be working. Markets are not phased at all by the prospect of higher taxes that Joe Biden is.
Why would they? Those affect only earnings, and
Yeah,
who even
and,
notices earnings?
There was I read the piece from, I think it was the HSBC research. I have to look back on it. But basically, it was saying for like 3 pages, yes, this valuation, stocks are at 99.9 percentile of all time. On this valuation, 99. On this is 98. But we still have this ratio and that ratio, which is only 85% percentile. So really, we could go a bit further.
If you manufacture enough ratios, I bet you can find like 1 or 2 that just show them like overvalued and not like in a bubble.
Yeah, exactly. So unfortunately for us, or for people who trade FX, we are tied to the stock market. That's what we have been for many months now, and we still are. And so if you're trading dollar pairs, you have to look at equities. You have to look at bonds as well. You always did, but now it's become a lot more dependent and correlated. So in terms of things happening in the world, I mean, the only thing of note is that I've been reading that the 1.9 trillion plan is being questioned. There is some resistance from both sides, people from both sides, Republicans and Democrats, and people saying, calling for a smaller deal. So, again, I'm not paying too much attention to these things, although, there are articles on Bloomberg and Reuters about them. And yes, this might happen. Yes, you know how it's going to be. They're going to negotiate a bit here and there, 0.1, 0.2, 0.3 trillion here or there. Who cares? This is just one more package. There probably will be another after that and another. And, I don't think it's worth dwelling on these things. In terms of the virus, I was reading that we're getting close to 100 million cases worldwide. So, it's something quite important.
Reported cases, because they're obviously multiple times that.
Yes, but the vaccine rollout is happening. Maybe in Europe it's a little bit slower than in other areas, but still it's happening. And the way things go, you prioritize the people you vaccinate, health workers, and then older people. Eventually, you're going to get the results. Eventually, you might have to redo it every 3, 4, 5, 6 months, and keep doing it for years. And but the main thing is that you will get a result, and that's what's needed. So
yeah, there is an asterisk here, unless, for example, the new strain is,
and they have to change the vaccine.
Yeah.
Are you guys going to get the vaccine when offered to you, Steve?
Yeah, definitely, okay. Because when my turn comes, since I'm rather young and healthy, which I'm assuming best case scenario is going to be like in 3 months. There's going to be already like
lots of evidence.
Almost 6 months of people getting the vaccine. So even the the little hesitation I have due to rolling it out of the door, like with unprecedented speed.
If you were old like me, would you get it?
Yes, I would.
Okay, thank you.
For a different reason, though, because the risk reward would definitely be that the any possible vaccine like side effects would still
be worth it.
Be worth not risking to get COVID at an advanced stage, or if for people that have underlying diseases, etc. Yes.
Okay.
Yeah, I'm gonna get it too. Obviously.
Okay.
My parents are getting it now, and then it's out to.
Well, a famous baseball player here in the U.S. died, Hank Aaron, and I actually read reports that he got his second dose before he passed away. And he did it because he, wanted to be an example for African American citizens here in the U.S. to go ahead and do it. I don't think they're, saying it was a direct cause of COVID, but he did have his second inoculation, then passed away fairly short after. So anyway,
Listen,
it's not big in the press, that story. But
listen, I have no idea. I mean, I don't know about. I don't know about the story, but I can tell you one thing for sure. If you vaccinate X number of people, some of them will die following the vaccine, because at X number of people, some of them die at some point. You know what I mean?
Oh, yeah. Okay. So just of any other cause, right? Okay.
Yes. I mean, that's not evidence. If you vaccinate 1 million people, is there any chance that from those 1 million people, some of them won't die a few days after the vaccine, statistically speaking? Especially when you start by vaccinating
80-year-olds.
80-year-olds, which are anyhow at the average age that the person dies, right?
Yeah.
So, I mean, cause, that type of what seems to be correlation doesn't imply causation, because the correlation, in my opinion, is just simply between the age of the person and getting dead, and not vaccinated and getting dead. Now, we would have a different conversation if we were vaccinating 30-year-olds and they were dying a few days after the vaccine. You know what I mean?
Yeah. Okay.
Yep. We all die anyway. Forex Gal, yeah, that's true.
Yeah, that's kind of inevitable, unfortunately.
Long run, we're all dead. Yeah.
Yeah.
So this week we have the Fed. Probably the only thing that really can stir up any kind of market action, apart from tape bombs and things happening elsewhere. But
pretty sure they're going to be very hawkish, like they're going to hike 5 times.
They can't be anything but dovish, right? They can't be anything but
obviously.
dovish. But you never know. And but yeah, otherwise it's been a quiet start. Equities don't know what to do. Metal slightly higher. Dollar's trying to rally, but really not convincing yet. I still think we have a shot higher in the dollar. How much higher? I don't know. But I talked about DXY going to 95, maybe even 96. People were laughing, but I think if it starts, it's going to get there in a flash. I think we've seen how it can trade. So
agree.
I wouldn't be surprised. I really wouldn't, especially now that everybody knows that the dollar is only going down.
Yeah.
So
yeah, it's even for my taste, I've been bearish the dollar for a long time, but even for my taste, how much it's become now a mainstream thesis. It's definitely not of my liking, because usually that's what you find near turns, right? Now, of course,
what's interesting, there also is a McDonald's commercial about what $1 could buy. And I remember several years ago, McDonald's running an ad about $1, when the dollar was under pressure, showing that you could still get something for your dollar. And that was near $1 low.
Yeah. That's usually the case with headlines as well. And we all know why, because, usually when everybody catches up to a trend, it is so mature, right, that it has run, if not all of its course, it has run most of its course. That's the concept. And that's why very frequently mainstream, like magazine, newspaper, big, like titles and headlines like, oh, King Dollar, you see headline like King Dollar, you're like, oh my God, I need to get rid of every single dollar I have. Or you see
that was Larry Kudlow's take on
or headlines like dollar is trash, then you're like, oh, I really need to get myself some dollars in the short term, you know what I mean?
Yeah. Markets in turmoil, you need to be buying.
Yeah. Or like, the very, very euphoric titles, you also need to fade them. Although, to be honest, that has been much tougher to do because, due to throwing more gas to the fire, more gasoline to the fire during the last 12 years, very frequently, like euphoric titles just are followed by even more euphoric titles, and sell-offs are frequently sharp, but in the vast majority of cases really short-lived, right? So you need to keep that in mind. Speaking of the indices, the Nasdaq once again is clearly leading. It has broken through its ascending wedge, and it is now approaching the 161.8% extension of this consolidation that we had in a symmetrical triangle. And if you remember, at some point last week, I think it was some point midweek, I mentioned specifically the day that we had this gap higher in the FANG stocks, in the FANG index. So that was quite significant, and that's when actually Nasdaq started leading once again. Now, the rest of the indices are still diverging, are still holding their ascending wedges, or they've even started breaking down. One of these is the DAX. You can see that today it has been accelerating lower. Another one is the FTSE. So are
we
they
talked
actually
about the FTSE last week being one of the
Yeah,
few
yeah, yeah, yeah.
horses
Yeah,
not
true.
making new highs.
Yes, very true. Other indices are still within their wedge, as I said. Here is the Australian index, for example. You can see it here. It's still holding within its ascending wedge. You can say, though, on the other hand, that it is diverging in the sense that we're not at all-time highs, although somebody can definitely blame the fact that the Australian dollar has been very, very, very strong for a long period of time. For this divergence, I'm sure that if the Aussie was weaker, the index would have already produced a higher high by now. Now, having to do with possible reversals, as Blake mentioned, here is the USD NOK, for example. Listen, there is a possible bullish interpretation here, for example. You need to be very cautious, though, because we're still talking about fading a clear trend, right? Now, the arguments for that would be the RSI divergence, and that if you draw this move lower as a wedge, we actually broke out above it. We retested the wedge, and at the same time, in essence, the same horizontal support area. And somebody can say, okay, from a risk reward perspective, it looks really appealing to be long against the, 8th of January lows, right? Now, in my opinion, at the very least, you should wait for a break above 865 and play it as a double bottom. I think that's the safest thing to do. That is then going to trigger a double bottom. So, you want to be safe, in my opinion. That's the least you should do. USD CAD has not broken out from this descending trend line resistance, but as you see, the RSI divergence is, more or less the same. So bottom line, the theme remains what we said the other day, which is there is some evidence that momentum is slowing, having to do with risk on, and definitely momentum has slowed, having to do with the dollar sell-off. I do believe that we are getting closer to a reversal of those themes that's going to probably be short-lived, but might be sharp. So I'm not advocating that somebody should try to follow these trends, but on the other hand, personally, I will be waiting a little bit more before I do anything. Speaking of divergences, somebody can also notice the divergence of the VIX here, right? The VIX is stubbornly also diverging for quite some time now, right? Look at the VIX. VIX creating higher lows. Its RSI also creating higher lows, while the S&P creating higher highs with its RSI diverging to the downside, right? Here's the Nasdaq, and here's the VXN. The VXN, which is the volatility index for the Nasdaq, for those that don't know, is also diverging, right? So quite a few divergences that you shouldn't be ignoring, and I think that it will play out at some point in the definitely not distant future. So I think we're getting closer to a turn. I think you will be able to make money in the turn because the move might be rather big. I just don't believe it's going to last very long for the reasons that we all know. Everybody's going to step in, they're going to start buying if they need to make new vehicles, like to be doing things that are outside of the limitation of their mandate, they will do it, so on and so forth, plus inflation, right? I mean, the tons and tons of monetary inflation that we actually have. In any case, that's what the case is here. Now, having to do with the DXY. Now, the bullish case for the DXY is that we did break out from this wedge, right? We did have a leg higher, and the move lower in the DXY so far is very, very orderly. So somebody can definitely say, okay, this is probably a pullback within the context of a bigger rebound that is going to eventually lead to at least one more leg higher from here. Now, if that's the case, what are the resistance areas I would be looking for? One of them is clearly this broken trend line support that might act as resistance. Another one is the 92.30, 92.40 horizontal support resistance area. And if we actually have like a squeeze higher, then we're talking about a move towards 95 in all actuality, like what is it, 94.70. But in any case, one step at a time, right? Now, copper, we've been talking about copper and its strength as an indicator as well. Listen, copper seems to be getting out of this wedge. I don't like the fact that it's not accelerating lower, although I'm going to point to you a similarity with the DAX, because I was thinking the same exact thing during the weekend about the DAX. Look at the DAX. The DAX did the exact same thing, and today it actually seems to be accelerating the downside. So let's see if copper is about to do the exact same thing that the DAX is doing now, with a little bit of a delay. So I'm still paying close attention to copper here. Now, crude oil, so far, I don't see something bearish here, right? I mean, so far, this could be a bull flag, as simple as that. So for the time being, I do see the thesis for one more push higher before we move lower. Not that that's necessary. And, more probably, if that is to happen, it means that, for example, the S&P will also follow the NASDAQ with an overthrow over the wedge. So keep that in mind. I mean, this is a scenario. Natural gas, on the other hand, is having quite a nice day today. Although instead of jumping the gun, I've already told you my way of thinking here is we might still see a lower low. Eventually, I think we're going to break out from this channel, and when this happens, I think we're going to see an accelerated move to the upside. So until that happens, I really don't want to bet that we did find the low. Silver, gold, nothing has really changed. I'm still undecided. I don't feel confident enough to say, do we have one more move lower before higher, or we've already found a low. Gold, if in isolation I only had a gold chart in front of me, I would be more comfortable in saying that we have one more low before higher. If I only had access to the silver chart, I would perhaps feel the opposite, right? I would feel that perhaps we found a low because we've broken through this channel. We back tested it like 3 times and it's holding. So the fact that the two charts give me a little bit of a different bias makes me, undecided in what's going to happen here with metals next. I mean, are we going to see another leg to the downside before higher or straight higher? What I don't doubt in my mind is that we're going higher. Now the rest, as I said, I'm really torn. I mean, I'm 50-50 here. Now, another indication that at least the DXY index has a decent chance of having another leg to the upside is probably the way the euro has been rebounding, because the way the euro has been rebounding is definitely not impulsive so far. And since we know how important the euro is to the DXY, this looks to me, so far at least, more like a flag than like anything else, right? So, that also makes me think that the DXY is probably not done rebounding here. Although that doesn't say much, because as I've said the previous time, almost all of the rebound we've seen so far in the DXY is due to the euro. So far, that doesn't tell me much having to do with risk. Now, if risk turns lower, that should actually help accelerate the move higher in the DXY. Having to do with the cable, one more day, one more week, the same story. What is the story? The story is that we're finding it extremely tough to penetrate through this confluence of resistances at 137.40. And for me, that is very, very important, right? I still believe that from a risk reward perspective, this is an amazing opportunity to the downside, right? And the way we've been moving higher, and the fact that nothing changed following the resolution of Brexit, call it a resolution if you wish.
You're breaking up occasionally, Steve.
I do?
Yeah. Anyone else hear it out there? You disappear for about, I don't know, 4 seconds and you come back on. You're okay
really?
Now. Yeah.
It's probably you. Oh.
No? Yeah, it happened twice. All right, just letting you know. It's very short.
It's very weird because It's very, very weird. I would... Ping is 1 ms, which is amazing. Speed seems to be very stable.
Yeah, shouldn't have even mentioned it.
Yeah, okay. I mean, connection seems to be okay. Okay, tell me if it happens again. So, the weird thing is that some people say no breakup.
I know.
Then it might be a thing with...
In the US, maybe.
Might be a thing with the servers of Zoom. So perhaps some of the servers in some areas, have an issue with transmitting and some not, because that would only explain why some people say, there is no breakup. Yeah. And some say, yeah. So you see Germany, Europe, they say no problem. And yeah, so a lot of people report no cut. So probably then some of them Zoom servers were experiencing some, some kind of...
Mainly in the US, I guess. Okay. Some other people that agreed with me.
Okay. So then it's probably a Zoom local server issue. Okay, nothing we can do, unfortunately, about that. Okay, let me see if we have any questions. We do have a guest, right?
Yes, Christopher Inks is with us.
Okay, we've had Christopher in the past multiple times, if I remember. Yeah, there is a question about platinum, speaking of which. Listen, there is one thing that troubles me a little bit about platinum, but when I say a little bit, I really mean a little bit, right? It's the possibility of like a type of formation like this. But since it's very flat, my main thesis is that probably, we're just going to break higher. My long-term thesis doesn't change, right? I'm looking for higher platinum prices. I just see the divergence. I see this formation, and there is a possibility that we might see something like this first, right?
Yeah.
1170 in any case, I'm zooming out so you can see the importance. 1170 in any case is an important resistance area, so keep that in mind. I think platinum has a lot of catching up to do even with the rest of the precious metals, and I think platinum is headed much, much, much higher in the medium to long term. So, it's just about how it's going to behave in the short term. Is your guest here?
Yes, Steve.
Okay. So have a lovely Monday. Don't forget, last opportunity to get a very much discounted ForexAnalytix subscription. Enjoy the interview, Dale and the rest. Have a wonderful afternoon.
Thank you, Steve. Hi, Chris. Great to have you back, buddy. Hope everything's green. Happy New Year. Waiting to hear you. Hi, Chris.
Okay, can you hear me here?
Got you now, Chris.
Okay, great.
All right. How are you, buddy?
I'm great here. Let me see if I can figure out how to do all this again.
All right. The share screen's a green button.
Yeah,
Drop down.
Did I get that?
You got it.
I've got it? All right.
Yeah. It's small. The chart's pretty small, but it's up there.
So pretty small. I wonder why it's small. Let's see. Does that help?
You must be using, I'm assuming you're using a screen that's probably like 32 to 9 dimensions.
Yeah. I've got an ultra wide monitor.
yeah. So that's why, Dale.
Okay.
You can zoom in. He's using an ultra wide monitor, and due to the width, the height has to be.
Okay. Well, I mean, I could make it out, Chris.
No. I'll tell you what you can do to help everybody, Christopher.
Yeah.
I'll tell you what you can do. Listen, what you're going to do. You're going to change the size of your browser. Good. And now what you're going to do is that you're going to reshare your screen, but instead of choosing to share your screen, you're going to choose, there is an option if you browse lower when it tells you what you want to share. Instead of choosing to share a screen, you're going to choose to share a window, and you're going to share your browser. And that should make it much easier to see.
Okay, so I can just do it with just the browser here.
Yes, I mean if you go to share screen and share options, there you go. Yep.
All right.
Yep.
You see. Now if you want, you can give it a little bit more width as well.
Okay, great. I appreciate your help.
Yeah, thank you, Steve.
There you go.
Yeah. Steve's like a producer.
It works for me.
All right. So, okay, Chris, I noticed in a tweet that you sent when I was announcing the lineup that there was a lot of action last week. Kind of gave me the impression that some things happen that gives you conviction about a few different markets. So what are you seeing here in gold, buddy?
All right. Well, I've been on here a few times, and my thesis continues to be that that gold's going to, head on down toward, around $900, $1,000, somewhere right around there. And so far, it's doing it. We're kind of stuck in this bit of sideways right here at the moment, sitting right above this previous area of cluster of activity here from back around April and May of last year.
Christopher, if I may ask, that thesis is probably fundamentally based on what? Deflation?
Well, yeah, exactly. I mean, that's where it's come to now. Before all that, prior though, I was looking, let me kind of zoom out here a bit. I'd already been kind of looking at this as a expanded, well, we were looking at it a flat to begin with, just where you had an A and then a B up toward this previous high, and then bring that C down. And then of course it went on up above it. So now it's an expanded flat, but the same idea kind of holds. And then, that's the way I've been looking at it since right about, let me see here. I started talking about that back here, I guess right around 18 or so here. And then, as this has continued to develop over here over the last few years, the deflation argument, I think, really kind of comes out a lot stronger today than it, than it has previously. So, yeah, that
why do you feel that way, Chris? Because everyone is talking about, the moves we've had in grains and base metals and the Fed and stimulus. So, it's hard, it's definitely a contrarian view, deflation now compared to what it was a couple years ago. So, what keeps you steadfast about deflation being a force with all the other forces trying that would traditionally create inflation?
Exactly what you just said. You guys know, when you've been in the market a while, and you start seeing all this euphoria hidden, and we're seeing a euphoria not just across one or two markets, we're seeing it across everything. We're seeing, everybody's talking about the new bull runs just started for equities. After what would probably be, basically the shortest bear market in history. Everybody's talking about gold, 3,000, 5,000, whatnot. I've heard people talking about 10,000. And these numbers start getting kind of crazy. That's always one of those first things that kind of gets my attention, because, we've been through, the dot-com bubble back then, and, the GFC there in 2008. And, prior to that, the things we had. And so when you start looking at a lot of the different metrics, you start finding that the market itself, all these markets are kind of at these points that they've been at major inflection points where they've reversed previously. And, everybody, death of the dollar, dollar's dead and dying. It's going to go down forever. I think there was a survey here not too long ago where they mentioned, the three most crowded trades, and they were long tech stocks was the first. Second was short the dollar, and third was long Bitcoin. And, bringing up Bitcoin there as well. I mean, everybody, all the talk right now is, minimum of 400,000 or 500,000, and, 200,000 by the end of the year, 5 million here in a couple of years. I don't know, just to me, it seems this is all that topish talk. And then you look at things like things that I've discussed before, where we had with, oh my gosh, when you look at things like Schwab slices, and you've got the micro minis now that you can trade, and where there's 0% commissions, all these things that usually happen at the tops of markets, all coming out here now. And there was just an article just recently, I think it was on Bloomberg. It says newbies discover pink sheets, talking about the
penny stock volume has never been higher. It's setting records. Yeah,
absolutely crazy. Yeah. And so, that's my first thing right there, that hits me. And I'm like, well, let's kind of look at everything else.
But what more importantly is the wave structure to support being a contrarian, right? And even if you are a contrarian and you're looking for lower markets, you still have to manage risk on the upside, right?
Oh man, always. The biggest thing, especially Dale, you've helped a lot of traders, get into trading and doing it properly. And, one of the biggest issues they always have is that risk management. And they get into this point that if you talk about something on a more macro level, many of them mistakenly believe that you can't possibly that you're just sitting on the sidelines, and that's ridiculous. You always trade in the direction of the trend until it isn't anymore. But the idea is to get an idea of when it might not be anymore.
Okay. So where would that be in gold? This 2-3 year, well, gosh, it goes all the way back to 2016, the lows at 1050. Technically, aren't we going to need something like under 1,500 to kind of confirm the bearish wave count that you have?
Yeah, actually, I'm looking like around 1508. Actually, yeah.
Okay.
Okay. We can look at other things here. I mean, right here on the weekly, you can see we've got this bearish divergence here with the RSI. We've got it dropping off here, lower highs and lower lows here, while prices made those higher highs and higher lows.
Yeah.
Okay. So we look at that, but I think one of the biggest things is I think when we jump over to the dollar, I mean, y'all were discussing some great things this morning. I don't disagree with a lot at all, honestly. But I think it all comes down to the dollar here. And I mean, I'm kind of on the same page here right now. I'm not sure this is the bottom yet. It's possible. but there's no confirmation. I'm really kind of looking initially for a move above this. What is this here? This wave
95.
90.88.
Oh, okay.
This right here is the big trend. Let me kind of zoom out here a minute. We've got this big drop here from back in March. This
Right.
large
COVID. Yeah.
thing here. Yeah. And so we're about to get, we're near the breakout of that. And I kind of think that really sets a tone if we make that breakout. We're getting a bounce right here from back around where we were here in 18.
Right.
And so 2018 January there, that's, of course, where we had, December 17, 2 weeks before that was where Bitcoin kind of hit its high. And we had all that going on, and then of course we make this move up. So we're kind of looking for a reversal out of this area here. And I think if we get it through this descending resistance, I think that really kind of sets the tone.
Ballpark, where would that resistance be taken out, buddy?
Say that one more time.
Ballpark, where would that resistance that you're talking about be taken out? 92-ish?
It looks right here around 91 or so. Probably take a little bit of time. It depends on, we know that the dollar here can pop up pretty quick and hard. Probably, right there around 91, maybe 90.
Okay.
Depending on how long it takes to kind of get on over there and do it.
Mm-hmm. Okay.
But, again, to me, it's getting through this wave 4 here and this descending resistance here to really kind of set us going there. But I think a lot of it comes with, again, everybody's still very bearish the dollar. And I think it's because people tend to think that inflation or that QE is inflationary. But that isn't what we've seen. I mean, it inflates asset prices. But, a lot of that money, basically, most of that money just kind of goes in the Fed's vault there. And, so banks can, reference it as that they've got the reserves required to make these loans. The Fed's trying to get them to make the loans. At the end of the day, we're a debt-based society, a debt-based economic system here. So we have to have credit
Creation.
Yeah. So if we look over here at, let me see here. Here's Fred. That's the St. Louis Fed site. And we can see here's the problem. This is, basically it peaked out here around May of last year. Let me kind of pull this over here a little bit. But you can start seeing how we've been dropping off here. This is loans and leases and bank credit, all commercial banks. So we've got a contraction of credit going on. And then the same thing right here with the credit cards and other revolving plans, all commercial banks for commercial loans. I mean, consumer loans dropping off here. So, the Fed needs the banks, the Fed creates dollars, yes, but most of that money creation needs to come from the banks, lending out new loans. And the problem is the banks aren't doing that. They've been making it more difficult to get loans. And beyond that, people don't want to get it. People have been paying off their loans. We had in May of last year, I believe it was May of last year, the U.S. savings rate was at the highest rate ever, or something like that, 30+%.
Right.
And so, my whole thing on all of this, it goes even beyond deflation. It becomes, this whole idea of the top of the credit bubble. If we zoom out, we've got this cycle here from, this is the Dow Jones here from the Great Depression over here, running up to where we are right now. And, again, looking at something like this, this runs this cycle here. This is this grand super cycle we're talking about. So if we're talking about Elliott wave, basically, you'd hit a 1 up here and a 2 back down at the bottom of that stock market after the Great Depression there. And then this would be a 3 where we're at here. So we've got a 4 on the pullback. So yeah, so when we're talking about large cycles, this is where it's all started for me, is looking at this particular cycle right here. And I've been I guess sounding a bit more bearish than most, for a bit here. But again, if we're talking about a large cycle like this, it's going to take a little bit of time to unwind a bit to convince people to head down. And so when you look at all that euphoria and whatnot that's going on at the moment, it's hard to say, it's not going to be, it's not going to happen. It's hard to say that with the kind of everything that we've got going on here. I would be.
Do you get pushback from subscribers and mentees and And
you know
people,
what? Honestly, I've got the people that we have with us that have joined us are very open-minded, and that's great. And they understand that I'm not trying to tell them how to think. I'm just trying to get them to think and to understand how things work and what may come off of things. Because at the end of the day, when you talk about, you know, these global macroeconomic things, these are things that they're a little difficult.
I love that. I love that. You're not trying to tell them how to think, but teaching them to think.
Exactly. And, you know, a lot of people get into the markets and they get in at this point, you know, over the last few years where everything's real frothy and everybody's very excited. And, you know, retail generally tends to buy the top and sell the bottoms. And the idea is to get them to understand why they're doing that. Where's the psychological side of it? And then how to start identifying when tops may be near, you know, what kind of things do we look for in the markets? I get the most pushback, honestly, online is from people who, you know, they kind of follow me intermittently. They don't seek to really understand what I'm trying to explain. And again, they get to that point, they're newer traders. So they get to that point where they think that just because you're talking about a big macroeconomic thing, if it doesn't happen tomorrow, they think, oh, you're wrong. And, oh, you've been sitting on the sidelines for 6 months or 12 months or something like that. And
Opportunity lost cost.
yeah, exactly. And, you know, and that isn't the way it is. It's just the idea of trying to figure out what may be going on and making sure that you understand what to look for. And that way, you know, as it plays out, if it does happen to play out, you know, you're prepared, because otherwise, I mean, you know, it really scares me, because if things happen the way that, to me, they seem to be lining up to happen, I mean, we're talking serious kind of depression type stuff going on, and a lot of people are going to get hurt. A lot of people that are just becoming retired, you know, they're trying to live off their savings or off their stocks, you know, and their portfolio and whatnot. You know,
let me ask you this, Chris. I'd be interested in a wave count. You know, I'm looking at potential reasons why there could be a problem. And the 10-year yield went from, you know, about 50 bips to 118. Could that be both a reason for a bull market in the dollar and a repricing of risk? Do you have a wave count on the 10-year yield?
I don't think I've got it at the moment, but I think you're in the right thought process there. My one thing is, if we look at, for instance, if we look at the Fed, and the Fed's learning the things that it thought it knew, the things that it thought it understood about unemployment and the market and all of the, you know, and dollar printing and all this for the past 20, 30 years. You know, they're all of a sudden they're starting to find out these last 2 years that, wait a minute, that stuff isn't happening the way that they thought it would happen. And I think that's a bigger argument for the fact that, you know, again, going back to this whole idea of global macroeconomic stuff, that there really isn't a lot of, you know, I've got my opinions, the Fed's got theirs, but at the end of the day, you know, nobody really knows for sure what's going to happen. This is so intricate. You know, the Fed goes over here and they say, okay, we're not going to touch the interest rates, but we're going to mess with the yield curve. You know, and they do all these different things like this, trying to get the economy to do what they want it to do, what they need it to do, which is they need the credit to continue to expand. But at the end of the day, I think you just get to that point where people just say, listen, I can't do it anymore. I'm not going to keep taking out more credit. It doesn't make sense. We've got all this stuff going on. And then now we talk about, you know, again, the COVID going on here. And so the newest thing about that, I believe it came from Boris over there across the pond, saying that this new variant is potentially, you know, somewhat more deadly than the original variant. You know, the U.S. is doing this quarantine stuff now for anybody entering the U.S. I mean, I don't think the economy.
Do you think there's going to be another lockdown? Biden said he wouldn't. Do you think he's going to?
Oh, you know, Biden was a big one for the lockdown before he became president. And I wouldn't put it past the thinking, the way that the thinking goes over there in that camp right now. And this is not, of course, a political opinion on my side. I think all politics are just ridiculous, but the way that the thinking seems to be on that side over there, I wouldn't be surprised to see it if the numbers really kind of really started pushing up more than what they're doing now, because the idea on that side is, the government's going to take care of it. And I think that's what people, in the stock market and everything seem to believe. We look now and they've got these record level of zombie companies now.
Well, you know what? There are a couple shifts that may not be as friendly to the stock market. Number one is the new SEC chairman, Gensler, who used to be a banker at Goldman, and acted like a banker, but his views have changed over the years to a much more, Warren-ish type of thing. And then you have someone like Janet Yellen, who's talking about taxing accounts, stock accounts, if you don't sell the assets. So it's almost like an asset tax. If your portfolio value is 10 million, whether you sell and take profits or whatever, there's going to be some type of tax on the value of your portfolio.
Yeah. Using that mark to market mechanism to do that. Yeah, taxing you on unrealized gains. I think it's absolutely silly. Especially, I don't think that, in the midst of this economic stuff, this economic issue we're having now, that you go and do things like that. I mean, I don't think it's necessarily a good thing to do at any time, but really when you've got an economy that you're trying to get going, the idea that all of a sudden you're going to tax people there, like, oh, the people are going to have to pay the tax. I don't know. It seems misplaced at the moment, especially.
Okay. What else is on your radar, buddy? So we should be alert for a dollar bottom, but you don't think this may not be the dollar bottom. Could we break all the way to 88.5? And in the dollar, the recent low has been what, 89.20. 88.5 was a big number, and it looks like a line in the sand for a lot of people that even believe in a stronger dollar scenario, milkshake scenario, that 88.5 has to hold, or goodbye dollar. What do you think?
I don't think it's necessary goodbye dollar if it doesn't. I think it's a definite place you want to watch. So I've got this area over here, about 89 coming off that. And then of course, heading down there toward that 88.5. I think if you're let me zoom out here a bit more. Let me see. I think if we kind of lose this area we're at, again, I think we're looking down here, maybe, low to mid 80s, still a chance in there.
Okay.
And I definitely think it's possible. I don't ever say it's not possible. Anything's possible.
Right.
But we just definitely need to see some movement up here. But we've seen things recently. So what has happened? Japan, the Bank of Japan, back a few months back, bought a whole bunch of dollars. They said as a precautionary measure, basically against the idea of deflation. And I think that's interesting because with Japan, that's where all this QE stuff kind of started over there back in the 90s. They had that lost decade there.
Right.
And so the fact that they were buying up whatever it was, I mean, it wasn't a significant amount. It was decent enough. I think it was like 600 billion or something.
What did they buy?
I'm sorry?
Stocks. What did they buy? Stocks? BOJ?
They bought dollars.
Dollars. Okay.
Yeah.
And what was the rationale for that? The BOJ did it, or the government?
Yeah, exactly. And it seemed to be the rationale was just that they were just in case. It was a precautionary measure based on, just in case the value of the dollar went up. Nobody wants to deal with what we just had recently, which was March of last year, where everybody kind of went for it. We've got China right now trying to become its thing. It's trying to, supposedly take out the dollar as the world reserve currency. But, even something like that isn't anything that happens overnight. I think there's a lot of romanticizing about the death of the dollar right now, and everybody kind of imagining where that can lead and what that can, go on with that.
Well, that's been going on. I'm not a youngster anymore, but I've been hearing that since I was in the business. Okay. We're going back to the 70s, and probably Bretton Woods was when it started. So the death of the dollar has really declined quite a bit from historic highs, but
Mhm.
it didn't die. So interesting. Anything you want to wrap it with, Chris?
No, I mean, at the end of the day, I'm going to be honest with you, man. I think it's
Go ahead.
just, I think it just comes down to the dollar. I think that's really I think that's the beginning and end of all of this. And I think if we see the
Linchpin.
dollar popping up through 91 here and kind of going up,
Yeah.
there are no guarantees in trading, that. But I think
Yeah.
if we're doing that, that really kind of sends a strong signal that, hey, this might be the bottom for a bit. And
Okay. I kind of have see the potential of a move to 95 to 96, but I think that's going to be a real battleground for your thesis
mhm.
and the dollar bears thesis. Is that an important area to you, 95, 96?
Yeah. Let me pull out here. Let me see. That's right about.
And we'll wrap it with that.
Yeah, exactly. Yeah, I've got this kind of this 94, 90 level here
Okay.
that I'm still kind of watching. So yeah, I think
Back
once
to
I think if
4.
we can impulsively move on through that and close above that on a larger time frame, I think that really kind of all but guarantees. I think that that we're heading up to quite a bit higher. That the whole deflationary scenario comes in, and I think that catches people off guard. I think everybody's kind of waiting for it to all head the other way. They think the money printer's just going and that's it, but not understanding where the money's actually going via QE. So
Chris, there are some people, and I'm getting a question from one of our attendees that believe the dollar and metals could go up at the same time. Do you think that's possible? I mean, people are making, some very smart people saying, yeah, be long the dollar, but also be long gold. And, isn't that kind of what happened in the 30s during a deflationary period?
Yeah. I mean, everything, when you first jump into that period, when the dollar starts popping up, especially now, everything takes a hit. Metals, everything goes down.
Yeah.
But yeah, I think that's where you start. I think you start with the dollar, metals join in eventually, but I think you go from that deflation to that stagflation before you get any real just inflation. I think of course that's all pretty harsh for the economy and what's going on, which means a lot of jobs lost, a lot of businesses going out.
You got an extra bedroom for me?
Anytime, man. Anytime. If you like San Antonio.
Oh yeah. I'm looking at South Padre Island for a place to live.
Oh man, it's
you
a great
like
place.
it?
Lots of fun.
Yeah. Okay.
Yeah.
All right. I'm going to talk to you about it. So, where's the best place for people to follow your grisly work, buddy?
All right. Well, I mean, they can follow us on Twitter at TX West Capital. They can also hit us up online at howtotradetowin.com.
Okay.
We've got a couple other things we're going to be launching here in Q1 of this year, which are going to be pretty exciting. Things having to do more with macroeconomic and global financial related concepts and explanations and commentary and whatnot. So if they follow us in one of those two areas there, they'll be able to do that. Join in with that when we launch that.
Okay, everyone, at Texas West Capital, TX West Capital.
Yes,
Christopher Inks, my trading warrior brother, rooting for you and hoping that we're wrong about some hard times ahead. So
hey, I'll tell you what, man, that's it. You know what? Worst case scenario for me is that I'm wrong and we all get rich and make money, right?
yeah, okay. Either way, we can make money being short too, buddy.
That's right.
So that's a wrap for today, everyone. And Chris, thanks so much for coming in. And I think people need to hear the other side of the coin and reasons instead of just being bombarded by one side. So I appreciate you being the devil's advocate today.
Well, thank you so much for having me, Dale.
All right, buddy. We'll get back together in April.
Awesome. Sounds great.
All right. Everyone, remember, don't just count your pips, count your blessings. We'll see everyone for Turnaround Tuesday. You're very welcome. You're very welcome, Ingmar, Monica, Chris. They all enjoyed you. Thanks again, buddy.
Appreciate it. Thank you, man.
Adios.
Bye.